Hello, YouTube. Justin here. Today, we're going to be talking about how Russia's Putin says there are certain positive shifts in talks with the Ukraine, and we had a dramatic move overnight to actually getting to green on the week. So the question is for today, are we able to actually get back over 432? Are we able to close out of correction territory, or are we going to get some massive bearish headlines that are going to drag us lower into the end of the day? It's important to note here, like I mentioned briefly, that again, Russia's Putin says there are certain positive shifts in talks with Ukraine. And the reason why that matters is because we have the EU Leader Summit Day 2 wrapping up today. And then we got Joe Biden speaking at 10:15 to provide the alternative to what Vladimir Putin said. And then finally, at about noon, we've got the Ukraine foreign minister being on Bloomberg to provide his perspective. Everyone's going to be saying what they think their audience wants to hear. So Putin's talking to his own people. Biden's going to be talking to Americans, and then the Ukraine minister is going to be wanting to try to get some support. So I think what's more important for us than trying to guess what these guys are going to say is just know where are the critical areas on the chart that if we do move bullish or we do move bearish, how do we know who's in control? And I think that the first place to start is going to be here on the weekly chart. And what we can note here is just that we are set to open at about 429. However, what I want to point out here is just the exact level that we pushed to in extended trading hours. So here we can note that the high that we established right after the headline came out is right here at 433.22. And the reason why that level is so important is because we actually got back to green on the week. So flipping back over here to S&P to green on the week, we can note that last week we closed out at 432.17, which means that briefly we were actually green and we made a new high of the week. Our high of the week is 432.30. So what's really important here is that for us to remember this is 432 on a weekly closing basis would be the first time we would close in correction territory from 484 down to 432. That's a 10% drop. We have not yet closed a Friday below 432. If we do that today, it would be the first time. And for me, it would likely signal a shift in sentiment. So the key to today is going to be 432. Remembering that if we are able to keep advancing, we do have more upside resistance all the way to 440. So if we're going to get a dramatic oversized move today, it is possible. I'm just not sure it is probable. Why? We got Jerome Powell next week, and Russia only accounts for about 2% of global GDP. So what Jerome has to say is going to be much more significant, and having bull blinders on into the weekend is probably not going to help you. Last thing I would note here is that we're going to be opening here at, like I said, about 429. We do still have a daily gap. So the issue with that is we have a gap at 426.4, and the saying is all gaps get filled. It's just a matter of time. And if we can't fill the gap at the open here, I would have a strong suspicion it's going to get filled next week, if not on Monday, sometime later in the week. So we went all the way back above the green line. We broke our primary downtrend here. However, it's not quite holding. So we're settling between 428 and 432. So if we fill the gap early in the morning, it means that we're able to actually grind higher. If we don't fill the gap, I'm going to have my buzzer higher. That's all I would note here. I would also note the low from yesterday is 420.44, and the low that we were looking at is 420.76. So as of right now, if we're going to start moving higher, we got a low, higher low, higher low. And at least overnight on ES, we do have higher highs getting established on the daily chart here. So we can note that as we look here at ES, which trades 24/7 during the week, here we can note that we have a low, higher low, higher low, higher low. And from the low that we established, we have a higher high. Then we have an inside bar. This bar right here is the bar where we decide who's really in control. So we make an advance, we take a pause, and then the bulls advance it fresh with what? A higher high and a higher low. So what we're going to be looking for now is, can we actually get through this 430 area on ES or 430 S&P? Why? That's where we have all of this congestion. We have a relative low. We got relative lows, 1, 2, 3. We got the high, we got the open, and we got the current price. That 430 is the gateway for the bulls to make it to 432 and to cinch victory on the weekly chart. I would also note here that what's going to be very important for me as we go forward here to the rest of the day is going to be this VWAP. The VWAP is the volume weighted adjusted price overnight. And as we can note here, it's sitting at 4267. Why is that 4267 so important? What's our high of the day yesterday? 4264. Oh my goodness. If you're understanding what I'm saying here is that if we fill the daily gap, it is not time to get scared. That is where the strongest support is going to be found today. And then from there, it's a matter of whether or not we're going to go up, down, or flat. So I think we're going to fill that daily gap today. 426 would be strong support on both charts. And from there, it's a matter of how we digest. The bears are going to want to squash this thing because they've been accumulating puts all week and have not had a chance to cash out since Tuesday. The bulls are going to want to avoid payout and move the chart back over 432. So that people like me are going to think that we're not in correction territory, and maybe Jerome is going to give us a little bit of sugar for next week, meaning dial back the rhetoric a little bit. Last thing I'll be looking at here is just that we are set for a death cross here on S&P. So looking at the daily chart, we can also note that the yellow line, which is our 50 average, is getting very close to this 200 average. It's a lagging indicator, but we had that same thing happen over here on QQQ, and it was a pretty good signal. We were going for a fresh leg lower. So I just want to note that, again, we have the death cross formed here now. As it was forming, we were looking soft. We got our monster dead cat bounce, and then we ultimately failed. So last thing I'll leave you with right now, the video is going to be a little bit shorter today, is going to be the quarterly chart. That's right, the quarterly chart we talked about on the weekend, where everyone was making fun of me for saying maybe it's over, maybe we're closer to the bottom than the top. Well, what did we do? We held the lows. So let's just refresh that one more time. Low, higher low, higher low. And so far we have a higher high on ES, but it won't be a weekly higher high. However, what we talked about on the quarterly chart is going to be the one that is going to be the most important here. Again, looking at our current month right here, our current quarter, this candle represents 3 months worth of trading. We have one back here in 2020 and one back here in 2018. What I would note is that it looks very similar. If we remove just the events that are driving this candle, we look back to 2018, look back to 2020. Here we have almost no upper wick, and we plunge down and have a lower wick. We close below the low of the previous candle. Same thing here. We have an upper wick, but we drive down and we actually close below the low of the previous candle. What do we have right here? Ah, interesting. The low of this candle is 42636. So that means that if this pattern is going to repeat, we should close the end of the month below 426. And then that would mark the turning point going into April. So then again, gap down, pump up, gap down, pump up. So what I was trying to explain on the weekend deep dive, and maybe I didn't do a great job presenting it, but my point here is that whatever you decide to do, short, go long, you're not going to, in my opinion, again, I'm not Nostradamus. I can't predict the future. But if you look at the pattern formation here with the quarterly chart, if you're bullish, you're not going to know for sure until April 1, but probably the first Friday. And the way the trading works for April is that the first trading session is going to be April 1st on a Friday. So that is where the Friday into that weekend, if we're going to actually get a resolution, if you listen to what was happening at the hearings this week with the CIA and all the other heads, I forget all of them, FBI, all those guys, they said it's going to be a couple of rough weeks. So did Emmanuel Macron, who is the president of France, said that we're probably in for the worst period right now. So I think that we have to manage our expectations in terms of getting ready to go fully bully. And for me, whatever you decide to do right now, you have to be willing to hold on to minimum April 1 if you're investing. If you're trading, enjoy the chop. It's a trader's paradise. This is an investor's hell because we're moving on headlines and we never know what's actually going to hold. So again, like I mentioned earlier in the week, if you didn't have the balls to buy down here at 410, didn't have the balls to buy at 415, maybe you shouldn't be buying here at 427. Why? Because you're probably flip-flopping and you don't truly have a strategy or risk reward outlined in terms of what you're doing. So again, this one chart right here, if you know technical analysis, this should be your golden chart, right? Your golden ticket. Like if you're going to Willy Wonka's Wonderland. Why? We have a perfect uptrend. We have a repeatable pattern. And we have events that are going to likely drive us either higher or lower. So with that said, I wish you guys all the best of luck, and we will see you for our normal weekend deep dive on the weekend. If not, please try to end the week on a high note. It is Friday. It's going to be a long week with a lot of trading next week. Enjoy it and come back fresh and prepared for a fresh week of trading. Thank you for watching. We'll see you next time.